afternoon, class.
Good afternoon, madam.
Welcome to the topic on correction of errors. We want to identify the different types of errors, understand the basic process of error management, appreciate the relationship between errors and profit, and then look at the process of rectifying these errors and its impact or effect on the accounts. What is an error? An error is an unintentional mistake, any mistake that we do in the course of inputting the figures. Okay, any of us could make a mistake, and that could be termed an error. And it could occur at any stage in the accounting process. Remember last semester, we started with the recording. Okay, from recording, we group them, we post them to the ledgers, and it ends up in the preparation of the financials. And so in that process, we could experience an error. What we must note is that there are two types of errors. There are some errors which could result in the financial, the trial balance not agreeing, and others which does not necessarily affect the agreement of the trial balance. If the mistake occurs, the trial balance will still balance irrespective of that mistake. And so going forward, we'll look at these two broad categories of errors, those that affect the trial balance and those that do not affect the trial balance. Then we would also look at the implication and how we can rectify them in the financial records. So we'll first look at errors that do not affect the trial balance agreement. We all know that once we record the entries, the accounting transactions, and post them to the respective ledgers, the end result is the trial balance. And the trial balance must agree before we can prepare the financial statement, the income statement, the statement of financial position. And so these errors or mistakes, when committed, okay, may not necessarily have any effect on the trial balance. Everything will go on with or without having realized these mistakes. However, if they are later found out, we have to also rectify those errors. And so these errors, when committed, will still agree, the trial balance will still agree, because the twofold effect will not be experienced. We'll look at them one after the other. There are about 6 of them. Error of omission, okay, and this is where you completely omit a transaction through no fault of us, anybody, okay, any accounts, clerical staff, anybody who is entering the transaction may omit it without any intention of fraud, and that is where we are saying it's an error of omission, not where you deliberately want to do it because of fraudulent attitude or behavior. Here it is a complete omission. And so in this case, and we have an example there is a sale to Jane, 2,000, and in the course of recording, somebody fails to enter those.
How do you tell me when it is deliberately done?
Where it is
deliberately done.
Where it is deliberately done.
It's because you didn't do it. It's unintentional. That's why it's error.
Exactly, it is unintentional because by nobody's fault, perhaps that voucher slipped through, or somebody did not.
So I'm saying that when it is intentional, it's fraud.
Yes, once it's intentional, then it's fraud, and somebody deliberately refuses to record that. Okay, so once it's an oversight, then we can say it is an error. Okay, so that is it. Then we also have an error of omission. Okay, error of commission. Okay, with an error of commission, the correct amount is entered but in the wrong account. So we all know the various accounts, the individual general ledger accounts we have, the individual accounts that we have. Perhaps in recording in Amina's account, you sent it to Inime's account. In recording in Kojo's account, you send it to Kwabene's account. That is termed an error of commission. The figures remain the same. And so the reality is that it is the books of accounts, the individual accounts, that are affected. The trial balance will still agree. We also have the error of principle.
So why won't this one affect the trial balance?
It will not affect the trial balance because the intention was to debit Amina, but you sent it to another individual's account. And if you did the same debit, then it will not affect. But if you credited instead of debiting, double entry will still play out. Okay, so that is why it will still agree irrespective of the individual account.
So the trial balance doesn't agree based on names, but just the entry.
The
Once you
entry.
have a debit entry, regardless of the name there, at the end of the day,
it will still agree. Okay, yes, I agree with that. Okay, then we have the error of principle. Okay, here the transaction is posted to the wrong class of account. Okay, thereby breaking the accounting principle. So we have an instance there, cash received from the disposal of a fixed asset is credited to sales, okay, account. Yes, so there is a sale, all right, but that cash which has been received, the entry will be right. Again, it is the general ledger accounts that are affected, not the amount. Okay, not the amount. The principle is that with sales, you know how to record it. When it is fixed asset, you know how to record it. But in this case, you have misplaced principle, if I should put it that way. And so it is an error, and all we need is to correct it. Again, the amount will not be affected because once you receive cash, your cash account will ordinarily still be debited.
Yeah, so I wanted to cite one example with the error of principle, and that has to do with treating capital expenditure item as a revenue expenditure. If you recall last semester, we look at capital expenditure and revenue expenditure. So for example, if you purchase motor vehicle with cash, the normal account to be debited should be motor vehicle account, right? But if you mistakenly debit this one to motor expense account instead of motor vehicle account, then you have treated a capital expenditure as what? Revenue expenditure. Okay, so that's one of the classical examples of the error of principle, when you treat a capital expenditure as a revenue expenditure and vice versa.
Thank you, Amando, for that.
Welcome.
So we have the error of original entry. Okay, and this error is committed when the figure used to pass the entry is different from the original figure. However, even though it is different, we still adhere to double entry. Why? Because if instead of 500 we used 350 as the example is cited, it will still balance. Once you are debiting rent 350 and cash 350, whichever way, it will still balance. But in real sense, the intention or the amount was how much? 500. Okay, so the original entry, the basis, the starting point, the figure quoted was wrong. But double entry still plays out, and the wrong figure has been used throughout. And so that makes it agree. Okay, and that is error of original entry. And then complete reversal of entry, okay, where the correct figures are used, but the entries are posted to the wrong sides. Okay, and I'll give a typical example. Somebody give me a transaction where we can do a
Paid creditors with cash.
So paid creditors
With cash.
with cash.
1,000 Ghana.
How much? 1,000 Ghana. Okay, so who give us the entries on what dates our transaction is incomplete?
Convenient to date.
24th March 2020.
Yes.
So what will be a double entry?
So
Credit cash.
So we credit cash and debit what? So we credit our cash account and we will debit our creditors account. This would have been our normal what? Entry. Are we okay? But with complete reversal, you would have done the wrong thing, and that would have been debiting what?
Cash.
Cash, and then crediting our creditors. And that would have still balanced the trial balance because the double entry has been observed. The only challenge here is that the entries in itself are wrong. Okay? And in order to correct this, we would have to reverse the original entry, and that's why it has the name complete reversal. Okay? If we reverse in respect of one of the accounts alone, there will be an imbalance. What it means is that if in trying to reverse this, we go back and credit the cash with the amount, it means that the creditors balance will still hang. And so we'll have to reverse this whole and then do the right thing. And that is the complete reversal. Then we have error of transposition. Okay, with transposition errors, here we have transposed the figures. Sometimes in recording, accountants, we know we are all dealing with figures. Even in your exam, sometimes you are tabulating, and instead of writing 135, you are writing 153. Okay, it is allowed. Okay, so when it happens, it only suggests that the correct figure has been transposed. Instead of writing 1, 2, 3, you enter it into the books as 1, 3, 2. Okay, which runs through the recording system from journal to ledger to the trial balance. And again, if that figure is used throughout, the trial balance will balance. The only challenge is where at a point some people have used 132, and at another point people have used what? 132. 1, 2, 3, sorry. Then you expect an imbalance.
It's usually caused by witches.
So it's usually caused by who?
Witches.
Witches. Okay, this one there will be no witch to cause it. So that is an error of transposition. And so these are the errors, okay, that do not necessarily affect the agreement of the trial balance. The question is, how do we correct them when they occur? As and when they occur, because they don't affect the trial balance, we need to prepare the journals. Okay, if you recall, last semester we did a lot of journal entries. Okay, so to correct errors, you need to open journals. Okay, to make sure you are correcting the errors, reversing entries where you have to reverse. Okay, so for instance, if you take this particular one, okay, what we have to do is not only to record, reverse it with 1,000.
Madam,
yes.
Which journals are you going to use to correct the errors? Since we did a lot of journals last semester.
So which journals would we use? Which of the journals do you think we can use in correcting? Cameraman.
The general journal.
Okay. So if you recall, we did the uses of the general journal.
Yes.
And one of them is for correction of what?
Errors.
Okay, so we are going to be using, as our cameraman and others have indicated, the general journal. Remember the uses of the general journal, one of them is for correction of errors. And so in this case, we would not go back to the entries to go back to the accounts and do. We will do it through the general journal. Okay? If at the end of the period we would have a classic example where we can all work through and then have a feel of how to do it. But go back and go and revise on your general journal, then we would apply that. Okay? Now, correction of these errors is done either by reversing the wrong entries and posting the correct ones, or finding the differences and passing the correct entries. Okay, suspense account will not be affected as the trial balance was not affected. So for errors that do not affect the agreement, we don't need what? A suspense account. All we do is to open the general journal and do the corrections. Those that we have to reverse and pass the new entry, we will do that. Those that we have to find differences, we will do that. Okay, and that is it, as simple as that. We will look at the others, okay, which are errors which will affect the trial balance. The trial balance must always agree. And if it does not agree, what it means is that we cannot go ahead to prepare our income statement and our statement of financial position. And so once the trial balance doesn't agree, we have a responsibility to look for the disagreement and ensure that it balances. In fact, not the forced landing. We don't want forced landing. Or what do you think?
Exactly.
Yes, so at this point, as Amanda would say, we don't want witches to force land. Okay? We would have to look for it and make sure. It is a very difficult thing practically to do, where you have to now go back and make sure that your trial balance agrees. Okay, it's quite a Herculean task, but we still have to do it. So, what are some of those errors? Casting errors. Sometimes we are just adding up, and it happens in exams with your calculator and you're under pressure. So you can imagine at the end of the year, your finance director is on your neck, you have a timeline to prepare the financials, and you are doing, and then possibly casting errors. So sometimes the individual accounts, the general ledger accounts, you may mistakenly over-add. And remember, it is the balances that we send to the trial balance. So in even carrying forward those balances, you may have carried a wrong figure, and so we need to take our time to check that. Another error that would affect the trial balance is the single entries. Okay, sometimes you have entered it all right, but the other effects, the double entry was not complete and it went unnoticed. And once it goes unnoticed and goes through the system, it's possible that it would affect the agreement of the trial balance. So we must also be careful that we always adhere to the double entry principle. 2 debits or 2 credits for 1 transaction. Here, in a bid to adhere to the double entry principle, the entries are all going to one side. So in this case, we could still go back to our creditors transaction, paid creditors with cash 1,000 cedis, instead of debiting cash, instead of debiting creditors and crediting cash. It is possible that as accountants or as a new person, we all put all under debit. Okay, once you do that, you expect that the 1,000 cedis would have been replicated twice. Okay, it would have been replicated in the creditors and in cash account. And cash account would have been understated. And so that would also affect the balancing. Okay. Over or understatement in one account only. In this instance, cash would have been what? Under overstated. Overstated. Because we are debiting. When we debit, we receive. Is that not it? So cash should have gone down when we paid. Instead, we have increased it further. And so we would have overstated the cash account. And that would have had an effect on that. There are so many we can think of, okay, and we need to go back to our text and read on others that may affect the trial balance. Now, how do we correct it if the trial balance does not seem to, or we find these errors within the accounts? Okay, one key account that becomes very critical is the suspense account. Because we cannot go back to the transaction, can you imagine 31st December or January, we are trying to put together all the figures to prepare our financials, and only to realize that the statement does not agree. Are we going back to January to do those corrections? In it would be very difficult. Do we open the January ledgers to go back and input and do the right thing? Obviously, that would be a big challenge. And so the suspense account is introduced anytime the trial balance fails to agree. Okay, anytime it fails to agree, we make efforts to locate the error. Okay, once that figure, the difference between that causes the disagreement would have to be sent to the suspense account, so that as and when the error is located, we can correct it there. Yes?
Why do you call it suspense account?
We call it suspense account because it is not a permanent account. We are not supposed to maintain it. It is only for the purposes of balancing of the trial balance, making sure that the trial balance agrees. And so we must be careful that it doesn't become a dumping ground. Most often in organizations, sometimes that's what happens. Once they create the suspense, nobody wants to take that responsibility of looking for the difference. And so for the meantime, let's keep it here and work as and when we find it. And then it keeps building up and becomes an albatross.
Meaning
And
at
so,
the end of the day, it's vanished.
Yes, it must
Like the
vanish.
suspense in movies.
Okay, it must vanish
To the end, and
at the end. So in organizations, sometimes there is a reconciliation team. Okay, because you are trying to prepare the financials, management may not want to bother you. So what they do is to set up a reconciliation team. And all they are doing is to reconcile all the incorrect and the disagreements that come through the accounting process. And so that team will take up the figure and make sure they can look for areas where the challenge or the disagreement occurred. And that is the suspense account. Okay. So in correcting any error that affects the trial balance, the suspense account would be involved. Okay. Now the principle is that where the error cannot be traced and the trial balance is not agreeing, the suspense account will stand in. So whatever difference, so assuming we have our debit and our credits, a typical example of a trial balance, okay, and we have sales, 1,000 CDs here, purchases would always be a debit, maybe 2,000, and then on and on and on we go. If at the end of the period, the trial balance total shows 5,000 for debit and 4,800 for credit, then the difference of 200 would be sent to where? The suspense account. Okay, and that is what we are looking for. Remember, the difference occurs at where? The credit side. And so that is where we would have to. So if the error has now been identified, the suspense account, as suggested earlier, will have to leave the books. Okay, so it is not a permanent account, and it's not supposed to be a permanent account. And so accountants will have to make a conscious effort to locate the errors, okay, and not treat the suspense account as a dumping ground for imbalances that may occur. It is possible because we are using figures. And so there is the temptation that once we cannot get it done, let's just push it and continue. And so management is always careful with suspense accounts in practical terms. Now, how does the suspense account look like? We have gone round with a T account, okay, just like a normal account that we have. The suspense account is a T account. If you look at it, we can have the difference in the trial balance either on the debit side or on the credit side. And so it doesn't mean that at every point in time, the two sides will have a balance. No. If the suspense account difference occurs and it's at the debit, you put it as a debit. If it's on the credit, we'll put it as a credit side. Okay? And then all the other transactions, as and when we find them. If it is an overcasting, so give me an example of a transaction that has been overcasted. Any transaction, just any transaction.
You have sold goods.
Sold goods to
Kofi.
Kofi.
5,000. 5,000.
Worth 5,000.
Credit.
What?
Sold on credit.
Credit.
On credit, okay. On what date?
On 25th.
25th March 2020. So now this is a transaction. Sold goods to Kofi worth 5,000 on credit. Ordinarily, what will be our entries? What are we debiting and what are we crediting?
Debit.
We will debit
Kofi.
we will debit Kofi and then credit sales account or goods. That would be worth how much?
5,000.
5,000.
Yes.
Assuming we were putting 5,000 and instead of 5,000 we debited it with 5,000 what? 500. This is clearly an error that will affect what? The balancing of the trial balance. Okay, either we have overstated our sales or we have overstated Kofi's what? Balance. In correcting this, what do we do? Assuming we have put the 500 in sales, but we have put 5,000 in Kofi's account. Okay, so Kofi's accounts have 5,000, our sales have what? 5,500. This is a clear example of overstatement. And this entry, though right, the entry is correct, but our trial balance will not what? Balance will not agree. So how do we do it? What do we do? What will be the entry would pass to correct this? Yes.
Okay, so key thing is that we need to know the normal account balances for each of the items. Sales is a revenue, we usually have credit balances, isn't it?
Yes.
So if we have overstated sales, then it means right from the one is the credit side of the sales that has been overstated. And once we know the credit side of sales has been overstated, then correcting it is easy, like we did under bank reconciliation. So if the credit side has been overstated by 500,
Exactly.
then it means I must go back and debit sales. And the purpose of doing that is to reduce the amount of the credit side. Then that charge should affect the suspense account.
So in correcting this, because the year has ended, we have put a difference in the suspense account. Remember, sales would always be on the credit side of what? The trial balance. Are we okay? And that has been overstated. So the difference, okay, in the trial balance between the debit and the credit will be how much? 500. So if we open a suspense account, we would post 500 to which side of the suspense account?
The credit side.
So this is our trial balance, debit, credit. Okay, so we have sales, credit, and here, let's assume this is the only transaction. And so we have 5,000 what? 500. We know we have Kofi's account. Kofi is a debtor. So what side would it be?
Debit.
On the debit side, 5,000. Is that not it?
Yes.
Let us assume these are the only transactions. So at the end of the period, the trial balance, the debit is 5,000, the credit is what? 5,500. So there is an imbalance of 500. So where do we send the balance to? In the suspense account.
That balance, that's credit.
So where would we send it to? Debit or credit? How would we transfer this to the suspense account?
Okay, so first, if you want to make up
then you should add it to the debit side, which is 500, to make it 5,500 on both sides.
Are we okay? So the suspense account, well, I have put this, I've closed the gap too early. So the suspense account will be at the debit side here, so that we can balance our trial balance and prepare the financials. Are we okay? We cannot leave it. So if we are debiting it, what do we do to the suspense account? Where do we send it to the suspense account?
Debit side.
Are we sure it's a debit side?
Yes, we are sure.
Okay, so the suspense balance is here, debit. Are we okay? So on that date, 31st 3/2020, there is a suspense from trial balance of how much? 500. Are we okay? So we know that from the trial balance, we have a suspense balance of 500. Now let us recall that it was a sale to Kofi. The year has ended. We only realized that, hey, we have overstated our sales by what? 500. If we're opening the T account, we know sales has a credit balance. And like Chief Armando said, okay, we would have to debit sales to reduce what? The overstatement. So if we debit sale double entry, still remember our double entry. What do we do to our suspense account?
Credit suspense.
Credit suspense with what? Sales over what? Stated. And that would be 500. Are we okay? Yes. And then our suspense account will have balance. Okay. So once we put the difference in the suspense account, let us remember that in correcting the error, we will still have to go by the double entry. Okay. Very, very important to note. Okay. So two balances cannot happen at the same time, as I did indicate. So the balances are there depending on the side of the trial balance. Okay, that shows the difference. We would have to put it there. Okay, so that is it.
Question.
Now, yes.
So does it mean when you are done with the suspense account, you have to prepare another trial balance to get the new trial balance?
Well, it depends on, yes, you would have to. Once you are done with the suspense account and you have corrected all the errors, you would have to go back and prepare a redraft of the trial balance to make sure that both sides agree. Perhaps your correction or your errors that you found out may not have been the right ones.
Oh, okay.
Okay, sometimes you go and you even realize that there were other errors that you even did not take note of. And that even create more imbalance. You get
Nice.
just because some were either not what you thought, or you had not even corrected them, done it rightly. Okay, so yes, you would always have to go back. Okay. So that is it, correction of the net profit. Now there are times where by the time you finish with the errors with respect to the suspense account, you may have prepared your financials. The question is, what do you do? We cannot wait till all the errors have been taken care of before we prepare the financials. Remember, users of financial statements, they are waiting. The year has ended. How do we present information, financial information? We cannot wait for as long as it takes to correct these errors. And so sometimes you would have to just go ahead with the financial irrespective of that. But when you are done and you find the errors, then you would have to correct it with the net profit. Okay, you would have to do the adjustment. And which account can you do the adjustment in? We've done company accounts. Which accounts do we think if there are errors that needs to be corrected? Where will the effect? We know that the effect, some of the effect will be on net profit. Which account? So we know that the net profit the undistributed portion would always go to
Income surplus.
the income surplus, or what others will call retained earnings. Okay, so at the end of the year, you have to pick that profit and do all the necessary adjustments. That is, if you did not find all the errors before the financials, or you found some in the next year. Okay, you have to restate your profit. Okay, and in accounting, in IAS 8, accounting policies changes in what? Prior year profit. Okay, it allows us to make changes to the previous year's profit. Some retrospective, some prospective. Okay, so there's a whole standard on it, and you would have to go back and do those corrections. Again, that is for higher level classes. Okay?
For
Yes.
our class, is it always all the time that after correcting errors, you must go and adjust the profit?
Well, sometimes you may have to go and adjust.
Okay.
Okay? At this level, like we said, if you find it in good time, you may have to. And sometimes the interim financial account may be prepared even before the errors are located.
So, I think the other point I was making is that, like the sales that you gave us,
Yes,
we know sales will affect profit.
exactly.
Okay. So the other thing I wanted to emphasize on is that it's not every error that we correct that will even have
Affect.
anything to do with our profit. So if
Exactly.
you have to correct our profit or adjust the profit, then it should mean that we are satisfied that some of the errors that we corrected will have some bearing
Impact, on the profit.
on the profit. So if I'm giving to give an example, if you bought a motor vehicle with cash
Yes.
and you don't record it,
Mhm.
this one has nothing to do with your profit. Because these are transactions that involve only asset, your motor vehicle and what?
And your cash.
In your cash.
And your cash. So regardless of this error, our profit that would have reported will still be
Be the same.
the same.
Remember, liquidity and profitability are not the same. Are we okay? So it will not affect it.
But I was thinking of one thing that if maybe there's
So come and stand here and ask your question.
No, why?
I was thinking of something like if
The motor
a
vehicle.
motor vehicle
Yeah.
depreciates, you have to calculate.
That's a smart one. That's a smart
Maybe
one.
if it affects the test too, there will be a provision for
That one it.
Exactly.
So that is a smart one. You are actually thinking. Okay. Because the amount of
Appreciation.
will be dependent on the value of the asset at the end of the year.
Yeah.
So his point is that if you don't include some of the asset values in your statement, then it means your depreciation values are likely to be what? Understated,
yes,
which will
affect profit.
Profit.
But the challenge is that how will you determine the depreciation on that
If you have
asset?
not recorded at all.
You get it?
Okay.
That's a smart way of thinking.
So, and that could be an omission. You see, you could go through and realize that you had not even recorded that transaction. Okay, at the point where you are trying to compute depreciation, then you realize that it is not. But the trial balance at that point will balance. Because that is clearly an omission, per the example.
Yes.
So, in a situation where you would have to adjust your net profit with transactions or some of the items that would have an impact on profit, then this is a typical draft, okay, of preparing post net profit. And so you take the net profit per your draft account, all the items, okay, from the suspense account that resulted in an understatement of the profit, you would add back. So for instance, anytime you understate revenue, it means the figure you quoted is lower. And we know that revenue, all things being equal, has a direct impact on what? Profit. The higher your revenue, all things being equal, the higher your profit. And so when you understate revenue, all things being equal, profit would have what? Been understated. And that is why you have to add back the difference, not the total amount. Remember, we would have added the amount of revenue. And so we are only interested in the portion that has been what? Understated. Are we okay? You add it back. So, as we were suggesting, the correction of errors where it affects the trial balance, and we are referring to those that would be corrected using the suspense account. We've talked about the fact that if it affects the net profit would have to be worked on. So we add back revenue, and we less revenue where it is overstated, okay, or cost and expense that is understated. Okay, and this is a format that you can always follow anytime cost or any expense is understated. The difference would result in a fall in net profit, so you less it. And I guess that would end our lecture for today. Please refer to question 1 of worksheet 7 on correction of errors. Go through it. We will send out some information as to when we'll be available to answer your challenges with the question. Thank you, and stay safe in view of COVID-19. Have a good afternoon.
So you need to sanitize right now.
This is sanitize your hands.
Sanitize your hands all
You know,
the
you
time.
too, right now. You have to
Wash
do
your
it.
hands, and as you can see, I have to sanitize at the end
This
so that
sanitizer.
your COVID-19 will not affect my mouth and my hand after today's lecture. I'm going to be indoors, staying safe and keeping well. Same to you, and do the same. Bye.
Bye.